Okay, everybody, I think we're live. I think we're good. Well, first and foremost, everyone, happy first day of August. So July is officially in the rearview mirror, so happy August 1st. Hope you all had a fantastic start to the month. But tonight on the stream, we are going to be talking about the Institute for Supply Management. Obviously, on the first business day of every single month, the ISM reports their manufacturing PMI numbers. And the reason why this is important, we usually do these streams obviously once a month because they report the PMIs on the first business day of the month. The manufacturing sector of the U.S. economy roughly, you could roughly say about 16 to 20% of GDP for the U.S. economy. So if we can look at the numbers at face value and say if a reading above 50, sorry, there's a bird right next to me. Very cute bird, by the way. If the numbers are above 50, that generally means the manufacturing sector in the United States is growing. Now, a reading below 50 means contraction. But as you guys know, as we talk about all the time on the stream, it's not enough just to look at those numbers at face value, okay? So if we look at the numbers for July, so today at the market open, we got the July 2022 manufacturing PMI number. It came in at about 52.8%. Now, the good news is that actually beat many expectations of analysts and economists on Wall Street, but what do we see it trending here? We're seeing the PMIs continuously roll over. So if we quickly review, if we go all the way back to February of 2022, the PMI was 58. March 2022, PMI was 57. April was 55. May was a little bit of an uptick at 56. And last month in June, we rolled all the way right back over to 53. And this month, obviously we got that reading this morning, was about 52.82%. Now, even though that signals growth in the manufacturing sector of the economy, we're seeing steep deceleration, and those PMIs are actually rolling over. So one of the things I wanted to note, if we look at tradingview.com, so if you want to follow along, this is a great piece of free charting software where essentially you could create an account, it's absolutely free, and you could see detailed charts of the NASDAQ, the S&P 500, different commodities, rates, fixed income. And you'll notice right as the PMIs were peaking in February, right? So right after the new year, we went through January and February, the stock market started to roll over. The S&P 500 started to decline, the Dow Jones Industrial Average started to decline, and so did the NASDAQ right along with the PMI numbers. And this is why I always talk about on the stream, it's important to go into your Excel files, actually chart and plot the PMI numbers in real time so you could actually see what the economic business cycle looks like, and it'll help you with your investing, your trading, and whatnot. So we're going to get started on the stream. I think we're going to go to Little Italy tonight. So I'm going to put away my laptop. That is what we're going to be talking about tonight. But I hope everybody had a good start to their August. So let me just put the computer away here. It was raining like crazy last night, so it is a little bit humid. So we're going to have to battle the humidity on the walk, but nothing that we can't handle here. Let's see who we have in the chat. We have the one and only ABX Girl. Hey, good to see you. Welcome. AT4 Nerds says we're live. Woohoo, good to see you, AT4 Nerd. Melissa White is here, says hey bro. Hey Melissa, good to see you. Hopefully you are doing well. Hopefully everybody had a good start to the month. Sally is here, says hey Tom, buy the book. Welcome, buy the book. Always a pleasure to see you. Wendy England, good to see you. British Gray, Mike Skate TV. Always appreciate you joining. Our moderator, Ruby Falcone. Good to see you, Ruby. Hopefully you had a good start to the month. Teresa Diaz says, hello, Professor Wall Street. Good to see you. Good to see you. So we're starting off this stream tonight. We are actually right under the 432 Park Avenue building, which is a beautiful building on New York City's Billionaires Row. Melissa White says, how is it light out? You know what I've been actually noticing, everybody, which is a little bit depressing? I notice it's actually getting darker now. I think this is to the time where it starts to get darker. So not looking forward to the fall. A lot of people are, not me. FredX is here. Good to see you, FredX. Chris Beeman. Welcome, Chris. Good to see you. Chris is joining us from Arizona. Jared Covey, welcome. Who else do we have? Water Blazing. Good afternoon, Water Blazing. I see Lee is here. Good to see you, Lee. Welcome, welcome, everybody. Man, it was a crazy day at work, I'm not going to lie. Talk about jumping right into the swing of things. I had an unbelievable day at work. Hopefully you guys had a little less crazy day where I was. Rusty Golfer says, good evening. Good to see you, Rusty. How are you? Buy the book, welcome. British Gray, good to see you. Daryl says, good evening, Tom good to see you, Daryl. Melissa White is joining in from Connecticut. FredX, welcome. Exploration says June 21st was the first day of summer and also the longest day of the year. Yeah. We'll be live checking out all the holiday stuff, but maybe I don't want to talk too soon. So the Dow Jones Industrial Average, the S&P 500, as well as the NASDAQ, all traded lower today, all but slightly. A little bit of a low volume day today on the street. And I think it was because everybody was adjusting and digesting these PMI numbers that we got. And in my opinion, this isn't good news. So as we know, we have the two negative GDP prints, right? 2 consecutive quarters of negative GDP growth. And it's sort of coming full circle here. And what I mean by coming full circle, what I mean by that is if you've noticed and you've paid attention to the PMI numbers over the past 6 months, we're noticing a clear trend of deceleration and a weakening manufacturing sector in the United States. So knowing that, and as we always review on the streams, you can use the PMIs as a leading indicator for the economy, right? So a lot of times, if you've taken an economics class, you could talk about leading indicators, you could talk about lagging indicators, and the PMI numbers, or the ISM manufacturing PMI numbers, are a leading indicator towards the economy, and there's a very high correlation there between the equity market returns and the PMIs. So I think it's only a matter of time, everybody, before we get a sub 50 print on the PMIs. And I think once we get that, let's say if we get a print of around, let's say 48, I think you're going to see on all the mainstream financial channels like CNBC, Bloomberg, they're going to be like, oh, the manufacturing sector is finally contracting after all of these months. But as you guys know, this is why it's important to plot the trend, right? So if you have Microsoft Excel, or if you have, Google Sheets or something like that, every time these numbers come out, you should be plugging and chugging them into a spreadsheet so you can actually see the dot plots in real time, right? It's literally a representation of the business cycle. And I just think it's so interesting how time and time again, the market will actually peak right as the PMIs are peaking and rolling over. So in the next edition of the Behind the Street newsletter, I'm actually going to include some infographics for you all, where I'm going to overlay the PMIs right on top of the S&P 500, and you'll actually see they almost move in lockstep. So as those PMIs roll over, again, as we said at the beginning of the stream, in February was the highest print. We have a 58, and now we're all the way down to 52. So rolling over, contracting, and so follows the S&P and the equity market. But it's a beautiful night out here on Park Avenue. Absolutely gorgeous. Hey, Chris Beeman says, hey, Vinny. Tom says we're going to Little Italy. Yeah, so hopefully we make it down there, Chris. I think it's going to rain a little bit, but I did bring my umbrella, so not to worry. Hey, Dan Zhang is here. Welcome, Dan. Good to see you. Caleb says, can we go to Wall Street? Maybe. We'll probably do that maybe Thursday, maybe Wednesday or Thursday. We'll definitely go to Wall Street maybe Wednesday or Thursday. Jack is here. Good to see you. Rusty Cole says, hey, Tom and everybody. Good to see you. Jack, welcome. Tea Cakes Jane says hello, everybody. Good to see you. Otto is here, says hello, Tom, and everybody. And Cindy Foley is here for the day. FredX says, thanks for streaming after a busy day, Tom. You rule. I appreciate that. It was crazy. It was a crazy day. Very, very crazy day for me. Very hectic. Jonathan Rivera says, you sound smart, but you're not. You've been spotted reading from a piece of paper. No wonder you don't show yourself. You've been exposed. Well, yeah, so I do have show notes. So obviously, if we're doing a 3-hour live stream, I will do or use show notes to work off of. I think that was probably expected, but Caleb Fraser says, hey Tom, will we end on West 34th Street? Maybe we will end on West 34th Street today, but I think we're probably going to go all the way down to Little Italy. It's probably better. Jay says, hey Tom, good to see you, Jay, welcome. XOXX Bob says, what's wrong with notes? I know. Yeah, I mean, usually we prepare. So if you're new to the stream, usually we prepare a topic for each show. And if we're streaming for maybe 2.5 to 3 hours, the notes help me keep on track or stay on track. So let's say, for example, tonight we are talking about the PMI numbers. So before the streams, I'll go through the report, do a deep dive, and write down the main sort of parts of the report that I think are going to be relevant to the viewer. But yeah. Yeah, Mike Skate TV says there's nothing wrong with notes. Dusty Cole says, dude, I appreciate that you care enough to take notes. Yeah, and so a lot of the times, if you guys read the Behind the Street newsletter, a lot of the times I'll compile these notes into the newsletter to sort of, because if you're watching the stream for an entire week, you'll go day by day, and as you read the newsletter, you'll be like, oh, okay, I remember that. We talked about that. We reviewed that already, so. Hey. Dan Zhang says, yep, if you don't like the fact that Tom preps for the streams, you don't have to watch. Lila, good to see you. So it was raining like crazy last night and a little bit this morning. So I did bring the umbrella, so if it starts to rain, we will have to put the umbrella up. But just let us cross the street here. Yeah, D-Hot's like QAnon conspiracy, Tom has notes. I wanted to talk about something real quick before we dive right into the PMI report. So there's been a lot of talk on Wall Street to say, hey, is this a bear market rally or is this the start of a brand new bull market? Now, I've been noticing an interesting correlation here between yields, so the movement of yields and that 10-year Treasury yield, and this recent equity rally. So again, if you guys, this is a piece of free charting software here called tradingview.com. If you go to tradingview.com, if you type in US 10 year, so US and then 10 and then YR, and you hit enter, it'll actually show you a clear, concise chart of the yield. So not the price of the bond, but the yield. It'll chart the yield for you. And it literally moves in lockstep with the market, which is quite interesting, right? I mean, this doesn't always happen, but much of the time it does. So check this out. The US 10-year Treasury yield is down to about 2.586% from a high of about 3.495% on June 14th, 2022. So going back to June 14th, this is right around when we saw that big rally in equities. And I was reading an interesting Barron's article over the weekend that essentially said the average duration of a bear market rally is usually between anywhere from 13 to 16%, and that's exactly where we are right now. So could this just be a potential give back in the bond market, or a little bit of a dead cat bounce in the bond market? Because if we remember correctly, yields move inverse to bond prices, right? So yields will move inverse to bond prices. So when you have an uncontrolled sell-off in the bond market like we had during this most recent crash starting in February, yields will spike and yields will go up uncontrollably like they did, almost at 3.5%. But now somebody in here, and I have a hunch who it is, it's probably the Federal Reserve or some other entity here, that's getting in here and buying bonds, thus suppressing rates. And when the 10-year U.S. Treasury has been going down, this is when we've had this big stock market rally. And as we've been reviewing on the streams, not 100% of the time, but much of the time, as yields go lower, that is very, very good for very high beta speculative tech stocks. And as rates go up, the first ones to go or the first ones to roll over are those very high speculative, high beta tech stocks, because if we think about the number one thing in investing, it is to determine the future value of a company's earnings or the future value of those cash flows. And as interest rates go up, right, as yields go up, the future value of those cash flows or earnings are now worth less today, right? So that has to be a sort of like a re-ration in the environment. And this is why over the past couple months, we've seen a lot of those SaaS type companies, software as a service type companies, get hammered, get clocked. So an interesting correlation we're observing there. Hey, Iris Lewis here, good to see you. This is good evening, Tom. Good evening, everybody. Welcome, Iris. Hopefully you're well. Happy Monday to you and happy August 1st. Vinny Castellano says, Tom, you truly made Maria's night for walking a little Italy. God bless you, friend. No problem, no problem. Yeah, Vinny, we haven't been there in a while too, so I think it's going to be nice to take a walk down there. It was a crazy day at work, so it'll be nice to take a walk. David is here, says, good evening, Tom. Welcome, David. Hemp Lord says, what's up, Tom? Good to see you, Hemp Lord. Good to see you. NNB 045 from Canada says, happy Monday night. Right back at you, NNB 045. So we're walking southbound on Park Avenue. Right now we are passing 50th Street. Photos from around New York is joining us. Good to see you, Photos. So smash the like button. Appreciate it, Photos. Good to see you. Dan says, have you ever streamed in Chinatown? So we do. We usually do, actually. I think about 2 months ago, we almost streamed in Chinatown every day. It really just depends on where I'm working from, or sometimes if I'm commuting to the city from the Long Island Railroad, if I'm near Penn Station, we'll usually start the stream at Penn and then go down. But as of late, I've been working on the east side. You can call it Midtown East, I guess, Upper East Side. So usually it's been more convenient for us to stream, walking around, let's say Midtown, Central Park South area, but I think tonight it's going to be good to go somewhere different. Ryan Royal, what's up? Says, I hear the church bell. Good to see you, Ryan. David, welcome. I see Hemp Lord. British Gray, good to see you. D Wood says, Elon collapsed the crypto markets by buying Twitter at the top. I don't know about that. I don't know if there's a correlation between Elon buying Twitter and cryptocurrency prices. Potentially, maybe. It's possible. It's definitely possible. So let me adjust my mic here. Hey, Mystery Girl with Missy says, hey Tom, hope you had a great day today. I did. Today was good, but you ever have those days where it's just like a firestorm, where like thousands of customers and clients are just trying to, which is good, right? I mean, if you're having conversations with customers and prospects, that's generally a good thing, right? So busy is definitely good, but man, was today crazy. Hopefully you guys had a good day as well. Hey, Dan says, if you ever come to Long Island City, I'll buy you a bubble tea. Dude, I'm down. I'm down. Love Long Island City. So before, I think I told you guys, I used to actually live in Greenpoint, Brooklyn. This was a while ago. This was actually probably just a little bit before the pandemic. I actually used to have an apartment in Greenpoint. But the way I would get there is I would take the 7 train right here from Grand Central Station. I would get off at Vernon Jackson Boulevard, and then I would walk over that bridge. I think it's called the Pulaski Bridge. Is anybody familiar with that? And right there, if you get off at Vernon Jackson, it's a pretty short walk to Long Island City. Very nice area. Hey, Penelope is here. Says, hey Tom, the kid jumping over the puddle. At that age, I would have jumped in the middle of the puddle. That's true, I would have too. The kid definitely stuck the landing too. 10 out of 10 on the landing, I'd say. So I was today because I had to go to the print shop. The printer wasn't working at the WeWork I was working out of. So I went to the one on Broadway. There's like a FedEx store. And unfortunately, I saw the most horrible e-bike, well, not an e-bike, an e-scooter crash ever. So for those of you, maybe just so you could visualize it, this was right on the corner of Broadway and 57th Street. So sort of right near Central Park, sort of right near the CVS and the Central Park Tower. So anyway, long story short, this scooter, the guy was wearing a helmet and everything, but he must have been going like 25 miles an hour. And I mean, that may not seem like a lot, but if you're riding a scooter, like an electric scooter, that's fast, man. And he blows through the red lights, and the car coming the other way down Broadway hits him, but not full speed, thankfully, because he did slam on the brakes. But the guy did go flying. It is scary to see it. So if you guys are commuting on city bikes or e-scooters, you got to pay attention, man. It's not worth it to rip 25 miles an hour down the city, blowing through red lights. Please be careful and cognizant of that. So I'll give you guys one more view of 432 Park Avenue. Yeah, so the ABX girl says car's speed limit in New York City is 25 miles an hour by law. I know. And usually if a car is going 25 miles an hour, it really doesn't look like it's going fast. But if you're going 25 miles an hour on a bike, it looks like this guy was on a rocket. But he was all right. The people called the EMS and he was good, but it was definitely not pleasing to see for sure. Dan Zhang says a lot of those scooters, riders scared the hell out of me sometimes when driving. Lots of them going really fast. Yeah, and does anybody know the laws in New York City when it relates to the scooters? Because, obviously in Miami, you guys see on the Miami streams, you could actually rent these e-scooters. I think one of the companies is Bird and then the other company is Lime. So I know in Miami and Austin, Texas, you could actually rent these scooters, but I think they're actually banned in New York. That's why you don't see electronic scooters littering this one. It was exactly like that. But those guys are actually going pretty slow, but this guy was ripping down. Hey, War Walker's here. This is Tomcat Mods in chat. Good to see you. We're doing good, War Walker. We're talking about the PMI numbers today. We got a 52.8 reading. We're going to do a little bit of a deep dive into that. I wanted to ask the group, so on the 31st, July 31st, or maybe it was the 30th, and then they posted the video on July 31st. But did anybody watch Face the Nation? I'm not sure if anybody watches, I think it's put on by CBS, right? Face the Nation? I'm not sure. One of my buddies sent it to me on a YouTube video. But anyway, so on Face the Nation last week, they actually had on Minneapolis Fed Chief Neil Kashkari. And what Neil Kashkari was saying about interest rates and about inflation was almost the polar opposite of what Fed Chairman Jerome Powell was saying on Wednesday when they raised interest rates 75 basis points. So Bob says yes, it's on CBS. Yeah, so check it out. I was going to program it into the Nightbot, but I just didn't have any time. So if you guys want to watch it, I would definitely suggest it. I think it's very educational, just so you guys can get accustomed to the Fed speak. So if you go to YouTube and just type in "Face the Nation" and then Neil Kashkari, essentially, let me just put it this way: if Neil Kashkari was Fed chair and not Jerome Powell, I think this market would have reacted very, very differently to that 75 basis point rate hike last week. And the reason why I say that, and I took down some notes here about what he said, so if anybody gets upset about the notes, too bad. So I took down some notes about what he said during that interview. So he said, and this is not verbatim, this is sort of paraphrasing. This is in relation to inflation, by the way. He says, "It's very concerning. We keep getting inflation readings and new data that comes in that surprises us by a large margin. Not only in a few categories, but it's spreading out more broadly across the entire economy. This will allow or lead the Federal Reserve to use all and any tools to dampen and kill inflation." Now, to me, that probably means that there's way, way more rate hikes coming down the pike. And the reason why I think this is in such stark contrast with what Fed Chair Jerome Powell said is because Jerome Powell, on Wednesday at the conclusion of the FOMC meeting, when they raised interest rates 75 basis points, he says, you know what, now we're going to be data dependent, and we may have to ease up on raising rates just to see how the effects of those rate hikes take hold. So sort of conflicting views or sort of conflicting signals they're sending to the market. If you listen to Neil Kashkari, he's saying, no, every single piece of economic news, every single piece of economic data that's coming out, especially, he said, in relation to wages. So wage growth, as you guys know, the wage price spiral, is just getting started. So even though people are making more money, it is not outpacing inflation, but it's actually helping inflation increase. So he talked about that as well. So I think that down the pike, we may get consecutive interest rate hikes at minimum of 75 basis points. Now, the Bank of Canada came out and did a full percentage point or 100 basis points. But I think this is going to be, a potential, which essentially signals to the market that this could be the start of, or the conclusion of the bear market rally, and then in which case we are going to roll over now. But if you guys want to watch that video for yourself, please check it out. It's on YouTube. If you type in "Face the Nation" Neil Kashkari, it's a must watch. It's definitely a must watch, just so you could sort of get accustomed to the Fed speak, so to speak. Brad's Brain says his name is Neil Kashkari. Yeah, so Neil spelt N-E-E-L, and then Kashkari, K-A-S-H-K-A-R-I. Neil Kashkari. And he is the Minneapolis Fed chief. And he was really, really hawkish, right? So the two terminologies there, if a Fed chair, or if a Fed president is sort of dovish, as they call it, that's when they say, we may ease up on raising interest rates, we may buy some more bonds, we may expand the balance sheet. That would be considered being dovish. But if you're hawkish, that's the sort of speak that comes out of the mouth of a Fed president. Inflation's running wild, not meeting our expectations. It's only getting worse. Inflation is only spreading throughout the economy. So we are going to have to deploy more tools and more resources to get it under control, which usually means more interest rate hikes and lower equity prices. Unlimited stimulus is fade the market August to October. Yeah, that's what many people are saying, unlimited stimulus. So you could be right. This rally could very well be over and then we make a new low. I actually think that would be the most ideal scenario here. I think the most ideal scenario, in my opinion, would be for the market to make one more low. And when I mean the market, that means all the broader indices like the Dow Jones Industrial Average, the NASDAQ, and the S&P. I think if we just make one more low, that'll bring us through the midterm election cycle. That'll flush out all the speculators, flush out all of the irrational exuberance, all of the, I would say, financial excess out there, in which case the Federal Reserve would have done its job, hopefully, at killing off inflation, and then maybe we can get back to some easing. So, who knows? But now we are on the corner of Vanderbilt Avenue, and we have a direct view of the Chrysler Building, one of my favorite buildings in the city. So Dan. So I actually want to know what you guys think about that a little bit more than my opinions, because I don't really get too political, but I want to know, I think there's many other people in the chat that are a little bit more well-versed and politically in tune than I am. So Dan Zhang in the chat, he's like, hey Tom, do you think Nancy Pelosi's visit to Taiwan tomorrow is going to affect the market when it relates to China? I don't think so. But I want to ask you guys in sincerity, what do you guys think of that? Do you think it's a big deal if Nancy Pelosi visits Taiwan? Do you think that now it's that China said specifically, do not go visit Taiwan? It's almost like we kind of have to now, right? I mean, just put yourself in Joe Biden's shoes for a minute. If you're the President of the United States and you have another country calling you out and saying, hey, you better not send Nancy Pelosi to Taiwan. If Joe Biden didn't send her, or if Nancy Pelosi decided not to go, that would sort of come off as weakness on the president, would it not? Now, I'm not saying it would or not. I'm just saying it may not be a good political look for Nancy Pelosi not to go. That's sort of what I'll say about that. I think if she does go, which I think she is, I think the news broke today that she's actually going to go, I think that would more be like a political move to say, you know, we're not going to be bullied by China. But at the end of the day, I don't really get too wrapped up in that. But I really don't think it'll have an impact on the markets. You know, I think if the market sells off a little bit, which I think it will, I think it won't be, they'll probably blame it on China, right? But we're also seeing a little bit of currency volatility in Taiwan, in Taiwan already, but I wouldn't blame it on China. I don't know. Yeah, D-Hot's like ISIS today, China tomorrow. Two-wheel freedoms, is it just me, or has the price of ice cream triple the price? I don't know. Shi Lee says Nancy Pelosi must stay away from China. She has no business there, says Shi Lee. Bob says Taiwan is our supplier of chips. Yeah, so Taiwan definitely is a critical point in the semiconductor supply chain for sure. I would agree with that. Pat says no pact, especially not with that banking crisis in China right now, says Pat. Mysterious Girl says it's too risky for her to go. Okay, so let's actually talk about this for a bit. Well, let's go off topic because I'm actually curious about this. So off topic for a little bit. And correct me if I'm wrong, I try to just block out all like political stuff, but supposedly the China warned, and let me know if I'm getting this right, supposedly China warned that if Nancy Pelosi does go to Taiwan, that they would take military action or shoot down the plane or just take military action or do some sort of military maneuver. Is that sort of what they're saying? Is that sort of the verbiage that's going on? Jones says, hello Tom, good to see you. But so here's what I'm getting at. I think China, I highly doubt China would take military action on Nancy Pelosi just because she goes to Taiwan. It's probably they're just trying to, be a big tough guy and say, hey, don't do it, and just try to be a bully and push us around a little bit. Who knows? JC Trade says that sounds like fake news. It may be. Dan says the exact words were, well, let's wait and see. Hey, Susanna says, my son says good night. Good night to you. Have a fantastic night. Kirby says, which stocks does Nancy Pelosi invest in? Yeah, so there was that, and we've talked about this, and I think everybody on the stream is on the same page here. My take, regardless of political party, is that if you are in government in general, influencing rules, regulation, or policy, you should not be allowed to trade or buy individual securities. Full stop. Doesn't matter if you're Republican or Democrat, right? Because essentially, you are dictating fiscal policy and government subsidy. So for example, there was a lot of politicians, both on the Republican and the Democrat side, that were heavily invested in cybersecurity stocks before they announced a bill that would increase cybersecurity spending in the United States on the federal level. Now, I agree with the bill, right? I think everybody on the stream would say, okay, we agree with the bill that we should be spending more money on cybersecurity to, essentially ward off attacks and things like that from foreign governments. I think everybody would agree with that. But if we find out after the fact that senators and people in Congress are buying call options on cybersecurity stocks before they approve the bill, I think that's unethical. We could have different opinions about that. I think there's an ethics question in play there. So the most recent news came out that Nancy Pelosi bought a couple $1,000,000, I think, worth of NVIDIA after we passed that bill to increase our investment in chip making. So that could have to do with anything like fabricators or chip fabs and the like. So at the end of the day, even if, it's her husband, which he's a very successful guy, I get it, and Nancy Pelosi claims that she is not telling him anything beforehand, I find that very hard to believe, but I also want to make clear on the stream that I'm not just singling out Nancy Pelosi on this, right? She is a big culprit, but there's also Republicans that are just as bad. I think the worst from what I've been tracking is Dan Crenshaw. He is like the master trader. If you want to talk about making the millions, I think it's personally an ethics issue. I think it's personally an ethics issue in my opinion. Brad's Brain says these are the kinds of people who put Joe Kennedy at the head of the SEC. Kirby says, yeah, that's funny. Does Nancy Pelosi take new clients? Oh God. AT4 Nerd says, I don't think there's any question. It's completely unethical, man. Couldn't agree more. And I think it can also lead to a huge conflict of interest within the government. And this is a main flaw that I think is in the U.S. political system altogether. Because if you allow for things like that to happen, it just makes lobbyists way more powerful than they should be, right? And I think that the reason why companies spend so much money lobbying, check out this piece of news here. So TikTok, I think they spent, in this last quarter, they spent the most amount of money in their company's history on lobbying the U.S. government. So why do you think companies, right, not to single any one out, every company pretty much spends money on lobbying. Why do you think they spend money on doing that? Right? Because they know the politicians have the power, and they know that if they get in the pockets of these politicians, that they could do anything, right? So I think it just perpetuates a cycle of distrust between politicians and the regular people like me and you, and I think it's unethical. The RT440 says, Tom, the difference between Democrats and Republicans is that Democrats will denounce insider trading by Nancy Pelosi, but the Republicans would never denounce the same if Pelosi was Republican. Yeah, maybe you're right. Maybe you're right. Yeah, and you guys know me. I tend to lean more towards the right, but I think I'm pretty fair when I call people out. I just think it's insider trading. That's what it is. It's insider trading, and the average person. Here's the point. I'll make one last point before I run off on a tangent here, a tirade. If it was any regular person, right, prime example like Martha Stewart, that did this, you would be in jail, right? You would serve jail time. But if you're a politician, it's actually encouraged. The way the system is set up, you actually get rewarded for this stuff. But if you're an average person like me and you know, we'll be thrown in jail. So that's why I think it's just horrible. But Jared Covey says, buy the VIX, Pelosi is a drama queen. You know, Jared Covey, that may be a good trade, honestly. That may be a good trade. Brad's Brain says, it's unethical and honestly immoral in my opinion. It won't stop though until outlawed and they make the laws. There are no more Mr. Smith goes to Washington. The RT440 says, yes, you are very fair, Tom. I like listening to you and your streams are great. Appreciate it. I appreciate that. But yeah, I think we can all agree in the chat, right? I don't want to speak for anybody else, but I think if there was a piece of legislation that was proposed that said, I would take it even as far as if you work for a government agency, even a government agency that could potentially have influence on policy, I think you should be isolated to buying index funds. So, for example, in your retirement account, you should only be able to hold like a basket of stocks, like the S&P 500 or the NASDAQ. Because if you're influencing policy and you're working on, you know, a big cybersecurity deal, or you're working on a big infrastructure project, well, you could say, oh, we're working on, whoa, check this out. Not to get distracted, but I mean, wow, check this out. I think this is probably an 11 out of 10 view. The Empire State Building's looking fantastic tonight. But yeah, I think you guys get the point. I don't really want to hammer it home too much. Yeah, Gregory's like, wow, this is a fantastic... I don't think I've ever seen the Empire State Building have a color scheme like this. Yeah, Ruby Falcone, it looks amazing, doesn't it? So, for anybody who wants to come here and see it yourself, this is 35th Street and Park Avenue. Beautiful, beautiful view of the Empire State Building here. AT4 Nerds is 20 out of 10 view. Clearly they watch your streams. Yeah, love that. Nirvana Fan 500, good to see you. Hey, Who Dat Dave is here. What's up? Good to see you, Dave. A Different Take says China was an isolationist nation which did not want to be a part of the global community. The world should have let it at that. It's too late now. Interesting perspective. Interesting perspective. Dan Zhang says, my girlfriend works as a fund accountant at a hedge fund. She's not allowed to trade any stock besides buying index funds. Yeah, exactly, right? It's just sort of like if you work at the investment bank, right? If you work in an investment bank, so you are allowed to trade, but it's very, very difficult for you to do so, to trade your own account. Even if you work at some consulting firms, right? So one of my buddies works at a firm called Third Bridge. I'm not sure if anybody's heard of Third Bridge. Maybe you've heard of a firm called GuidePoint. But anyway, they work very, very closely with hedge funds and other equity research companies. And even then, since you're exposed to potentially proprietary information or insider information as you're doing consulting, you're not allowed to trade stocks, which I think is fair. I think is fair. You know, if you're exposed to information that, let's say, somebody like me wouldn't be exposed to, that gives you an unfair investment advantage. So, I mean, by and large, I think the SEC has clear and fair rules, but I think when it comes to government officials, I think they have way, way more insider information than, let's say, if you're on the sell side in an investment bank, or you're on the buy side. That's why they separate those two departments of the investment bank. So, you know, let's say if you're working on a takeover deal and then you send a piece of information to a guy at sales and trading, you know, that could be a huge conflict of interest there. But I guess they don't see a huge conflict of interest, you know, if you're voting on a bill to increase cybersecurity spending or increase infrastructure spending. and you know the bill is going to go through, I guess they don't see the conflict there. So Deborah says the Empire State Building is a tribute to Jerry Garcia's 80th birthday. Hey, very cool. Love that. Two Harbors is the only Empire State Building that looks good in colors like that. That's true. Yeah, the Empire State Building is the only one that could pull that off. I agree. I agree wholeheartedly. Hey, Crumb75 says, love your content. Well, thank you for joining the stream. I appreciate it very much. Thanks for hanging out after work, everybody. Motion Desires says, hey Tom, I'm visiting New York for the first time. I don't know what to wear or how cold it is. What do you suggest I wear? Honestly, if you're coming now, just shorts and a t-shirt. I mean, I'm wearing pants because I had to go to work today, but it's a little bit humid, I'm not gonna lie. So in August, it tends to be a little bit more on the humid side. Maybe I would take a light jacket just in case of like a one-off day. It gets down to like the 60s at night, but I think you could pretty much just wear shorts and a t-shirt, maybe some pants. But welcome to New York. AT4 Nerds says the storms here in Lakeland, Florida are intense right now. Oof. This isn't my real name. Google says walks from Wall Street. Hey Tom, quick question. What do you think is a good minimum salary to have to be able to live on my own and no roommates in New York City or Queens? That's a good question. So in New York City, specifically Queens, if you want to live by yourself, and I think the group, maybe we can all help us out in the group here. If you want to get a studio apartment, I think you could still manage to squeak out a studio apartment for like $1,900 a month. You know, the last time I was looking, you could actually probably get a studio apartment for about $1,850 to $1,900 a month, maybe in places of the Upper East Side as well. But that's a studio, but you could still live by yourself. It just depends on how much within your means or below your means you want to live. But I'd say you could probably still do that on like a $75,000 to $80,000 salary. Right, obviously you want to strive for more, but I don't know what your profession is, if you're in finance or wherever you're in, but I think it's probably still doable on that type of salary. But let me know what profession you're in. Mark Francis says no roommates for me anymore. 1755 says a lot of landlords require a salary of 40 times your monthly rent. Yeah, that they do. That they do, which is getting really, really crazy because, so the New York Post came out with an article, and we talked about this a little bit a while back. So the average rent, and this is a little bit misleading, and we'll talk about why, but the average rent in Manhattan is now $5,000 a month. Okay, so based upon what 1755 said in the chat, many landlords here require an income. Hold on, let me just turn my Wi-Fi off. Many landlords require an income of 40 times the monthly rent. So your salary or your income needs to be 40 times the rent. If you don't make 40 times the rent, you could probably get a guarantor, or like your parents can co-sign, or your grandmother or a family member, in which case I think the collective goes up to 80 times the rent. But here's why it's a little bit misleading. So if anybody's thinking about moving to New York after college, or you just want to come here because it's a great place to live, you may be intimidated by those articles. You may say, oh my God, I'm never going to be able to afford to live in New York City because the average rent in Manhattan is $5,000. Well, the reason why they publish those articles is to get clicks, right? I'm not saying their data is wrong, but it's just the way we analyze that data. So in Manhattan, it is extremely, extremely diverse in relation to the amount of rent people pay. Extremely diverse. And here's what I mean. You could have a place in East Harlem where the rent is $1,800 a month for a studio. You could go all the way up to Washington Heights, Hamilton Heights, up near City College, and you could probably maybe get a 2-bedroom for like $2,000. But then if you walk down 57th Street, which is Billionaire's Row, there's apartments that are rented for 80 grand a month, right? So if you just average those all up, those statistical anomalies, which are, the Billionaires Row, the places in Chelsea, Soho, all those, $80,000 a month lofts, those bring the average up. So I think it's best to look at the median rent, but it's still doable, right? Even though I'm not trying to say it's affordable to live here, I'm saying it's doable, especially if you live within your means. It's definitely doable if you live within your means. Paulo says, hey Tom, my wife and I are teachers. Hey, and we are near retirement. Do you think we can live in the United States? Yeah, for sure. Yeah, absolutely, man. I'm not sure what the visa, if you're asking me like a visa question, I'm not too sure. I'm not really too sure about the visa stuff. But yeah, you could definitely, if you want to retire in the United States, you're more than welcome on my end. Yeah, James Brumley's like, it's doable, just shop at a 99-cent store. Yeah, I mean, the way I think about it, right? And you guys know, I've told this story many times. When I was in college, a lot of my friends were spending a ton of money because they wanted to live by themselves, right? So they sometimes even took out student loans and used those student loans to pay rent. But I think when you're young, and this is to all the people out there that are watching the stream that are maybe below 30, I'm just gonna say below 30 in New York. If you can just sacrifice 3 to 5 years of your life and live below your means, live with roommates, maybe don't take it as extreme as I did. I actually lived in my brother's friend's closet, literally. Maybe you don't have to take it to that extreme, but you're gonna thank yourself in a couple of years, right? So if you wanna move to New York, the salaries are higher here. Obviously, there's more opportunities in a big city. So if you can live below your means and say, all right, I'll have roommates, or I'm gonna, be really creative and maybe we'll get a studio apartment and I'll split the rent on a studio apartment where, we set up like a little bit of a divider, in which case we're only paying $800 a month each. You're really, really gonna thank yourself down the line, and trust me on this. It's the short-term pain for the long-term gain. So that is sort of the advice that I'd give. If you're just fresh out of college, trying to come to New York, that's what I'd say. Troy 1995, what's up, man? Ren, good to see you. So Edson's like, why the colorful lights on the Empire State Building? I think somebody just said that in the chat. I think Jerry Garcia, I believe. Hey, Lena Sandoval is here. Welcome, Lena. Good to see you. Paulo, welcome. Dr. Laura, Red Ranger says, big hello from Chile. Hey, thank you so much. Good to see everybody from Chile. But yeah, that's what I would say. So don't be intimidated by those articles. Yes, it's expensive to live here, but you can make it work. Trust me, you can make it work. I think it's better to sacrifice while you're young, try to save as much money as you can, and then, you can get your own place down the road. Disney Matt says, Tom, do you think someone can move into New York City in their own studio, maybe in Brooklyn or Manhattan right after college, or more likely have to get a roommate? I mean, it just depends on, the amount you're willing to sacrifice, right? But I think in general, you could look this up on Zillow or StreetEasy. If you want to get a studio apartment on the island of Manhattan, it's the cheapest you're probably going to find maybe is $1,900. And again, you guys could probably fact check me in real time here, but I usually am pretty good about keeping up on these things. It's, if you want to get one that's not in like a roach infested building, I think that's probably going to be the best route for you. But if you want to venture out into the boroughs, maybe you can get a studio for like $1,600, $1,500, something like that. Hey, this is in my real name. Google says, Tom, you are absolutely right. That $1,900 will get you bed bug roommates. Liminal says, I live like a king in Los Angeles for $2,000. Wow, I thought LA was a pretty expensive city too. Wow. Mark Francis says, I am getting a small nest egg, but being frugal, I did it 25 years ago, and that money is helping my retirement. Yeah, bingo, exactly. So just think about it like this. Here's how I want you guys to think about it. Because I think if you start to think about money like this, you'll start to adjust a lot of your decision making. If you, let's just say you don't get too technical, you don't manage money on your own, and you just put the money in, an S&P 500 index fund or something like that, your money's probably going to double every 10 years, probably. So based upon that logic, if you're 26 years old, if you're 25, and you're like, you know what, I'm just going to splurge, I want my own place. Okay, I'll give you a good example. So I actually helped my friend move 2 days ago. He's moving to the Upper West Side, beautiful apartment, 1-bedroom apartment on the Upper West Side of Manhattan. A 1-bedroom is $3,700 a month. So if you were to do that at one person, spend the $2,000 extra a month, think about if you just saved that $2,000 for 5 years in a row. 2,000 times 12 times 5 doubles every 10 years. You're going to be feeling pretty good in retirement, in my view. But yeah, so I'll tell you guys, since we're on this topic of rent, that's fine, we'll go down this route. So I helped my friend move out of a 2-bedroom apartment right around 22nd Street and 1st Avenue. And their rent on that 2-bedroom apartment went up all the way to $4,500 a month for a 2-bedroom. And this isn't like a traditional 2-bedroom that you guys that are watching the streams think about. This is, the rooms are big enough to probably fit a full-size bed. If you put a queen-size bed in there, it's probably going to be a little bit too tight. So anyway, they moved out when their rent went up about 50% to $4,500. My friend got a really nice place, and I actually think he got a pretty good deal on the Upper West Side in a beautiful sort of like brownstone type building. A 1-bedroom apartment is $3,700. So below the statistic that the New York Post put out, the average rent is $5,000. You could find things. You could find a 1-bedroom for $3,700. He lives with his girlfriend, so they obviously split the rent, which helps. But to a lot of people's questions here, if you want a 1-bedroom in the city, you're probably going to be looking to pay, around $37,000. Little guy Jerry says the only people who could afford to live in the city are finance folks. It's been like that for decades. I wouldn't say just exclusive. I understand what you're saying, and I do agree with you. But there's other industries too. You could be a nurse, you could be a doctor that make really good incomes. You could be a consultant, a salesperson, right? I don't think it's necessarily only people who work in finance. I just think that anybody who works on Wall Street, there is that stereotype that you make a lot of money, right? I think there's like that stigma around it. But yeah, I think you could pretty much have any profession and afford to live here. But generally, I do agree with you, yes. But guys, here we are. We are at 34th Street Herald Square today, right outside of the Macy's building. Yeah, Sal says software engineers. Yeah, I would even say software engineers probably make way more than finance guys. Especially if you studied. So in my experience, through all of the people that I've come across through my short life so far, the highest paying jobs of people that I know are people who have CS degrees or computer science degrees and either go work at quantitative hedge funds as a quantitative researcher. That's where like the thunderous money is. Also, if you're like a 5-year, 6-year veteran software engineer at Google, you're probably making, 350 to 500, maybe even 600,000. But yeah, if anybody is in college and you're looking for a very lucrative career, if you studied computer science, check out quantitative researcher jobs at like 2 Sigma or Citadel or Jump Trading. Those are extremely lucrative. Or just a traditional software engineer as well. If you work at a big FANG company like let's say Meta or Google, you're probably going to be at like the 350 range after a couple of years, maybe after 5 years. Liminal, Liminal says people getting paid $400K and literally they are experts at spreadsheets and Googling things. Yep. Stack Overflow. Yeah, Troy 1995 says Meta is going downhill. I think so too. Meta's earnings report was not good, was definitely not good. Hey, FB is here, says Tom, learning Python now, hoping to make some good money when I learn it. Yeah, and you don't actually necessarily need to go and get a traditional computer science degree. I know many of my friends that went right from high school that did some college, and from there, maybe they got a 2-year degree and then they did like boot camps, like code boot camps. You could also land pretty lucrative jobs with that. Yeah, Williams says Amazon is paying as well. Hat Guy says go for data science instead, more fun and less trouble. So I think this is a good conversation that we're talking about careers. So there is another, I think he's actually based in New York City now. I watch his YouTube channel all the time. I think you're gonna get a lot of value out of it. He's changed his content up a bit because essentially if you follow Joma Tech on YouTube, Joma Tech on YouTube, the only reason why I know Python is probably because of his channel. He gives a lot of content in relation to working in Silicon Valley. Actually started off working as an intern at Citadel, the hedge fund Citadel. I'm not sure what the position was. But that is a good resource, so check him out, Joma Tech. Lewis says, greetings, Tom, from Puerto Rico. Hey, Lewis, good to see you. Love Puerto Rico. Taxi cab, yeah, I think, so a lot of people are talking about the competition from TikTok. I think YouTube is getting a lot of competition from TikTok as well, because if you guys remember correctly, last week we did a big deep dive on Alphabet's earnings report, and one of the things we really hammered down in relation to Alphabet's earnings report was the YouTube piece, and YouTube Shorts are actually seeing the most exponential growth in terms of viewership. And YouTube Shorts is essentially the same thing as TikTok, in my opinion. Google probably wouldn't want me saying that, but it's literally a copy and paste of TikTok. Very short videos, things like that. So TikTok is definitely eating a lot of people's lunch right now, for sure. Hey, Average Guy is here. Good to see you, Average Guy. Says the Empire State Building is lit up in rainbow color. It is. It's looking fantastic tonight. Gabriel says New York City or Chicago for finance. If I had to choose between the two cities, I'd choose New York City all day, every day. Don Smith says I know a lawyer in New York City that makes around $425 plus $150K bonus, and has been a lawyer for 4 years. That's awesome, man. Congratulations on his success. I hope he does even better than that. Love hearing stories like that. Fiona says, hey, from Melbourne, Australia. Good to see you. Welcome everybody from Melbourne. Shi Li says the best way to live is the way of the Buddhist monks. They are the happiest people in the world. You don't have to be a monk, just live the way they do. I mean, I'm assuming it'll definitely help out with stress. I've recently, probably as of the last couple of years, like 2 years, a lot of the times when I wake up in the morning, I'll turn on like some meditation stuff, because especially if you're in sales and you don't know how to manage stress, it could definitely get out of hand, especially being in a big city like New York, and as you move up the stack, right? So as we're talking about, careers that you may want to go in after college, or maybe even if you're looking into a career change, I think one career that is very, very, I would say underrated, that is also very lucrative, is tech sales in general. So if you're selling software, or if you're on the hardware side of the house, selling hardware, I think that's a very, very lucrative and very stable career path to take. But unfortunately, as you start out, you're not going to start out as an enterprise account executive, right? So an enterprise account executive is selling into the Fortune 500, Fortune 50. the deal sizes tend to be a little bit bigger, and the sales cycles are also extremely lengthy, right? So for example, when I got my start in tech sales, I was actually an account executive in SMB, and SMB stands for small to medium-sized business. So you're selling into, little mom and pop shops. Maybe these companies have 50 employees, maybe 100 employees, and the sales cycles sometimes is a one-call close, or other times it may take like a month to close the deal. But as you progress up the stack and you move into enterprise sales, now the sales cycle could take almost a year, sometimes more. There's been some deals that I've been working on for 24 months, right? And that all has to do with when contracts are up. Usually if you're selling into a big Fortune 500 company, there's more than one decision maker. You have to sell to compliance, you have to sell to the CFO, you have to sell to operations, and really get everybody's buy-in, because oftentimes the implementation is really the largest, lengthiest part of the sale in my view. Liminal says downsize, stop spending money on stuff to medicate your feelings, focus on cultivating joy rather than empty pleasures. I think this has been an interesting movement. Has anybody seen those videos on CNBC's YouTube channel about these people that they're able to retire early by moving to Mexico or Puerto Rico or something like that, where the cost of living is like, it's almost laughable. I didn't even know this up until recently. But I guess you can get like a one-bedroom apartment in Mexico for like $450. So I mean, let's say you work hard and you save your money, things like that. And you want to call it quits early and you just hang out on the beach in Mexico. I didn't know it was so affordable to do that. But there's a lot of videos like that. Wow, check out this view of the Empire State Building here. There's a lot of videos on that on YouTube. Yeah, Penelope's like Turkey as well. Travel says yes, America is too expensive. But at the end of the day, I don't think I'd want to live anywhere else but the United States in my view. Lewis is Viva Mexico. Good to see you, Lewis. Welcome. Sophisticated bloke. Good to see you. War Walkers, the Empire State Building is showing out tonight. Indeed they are. Indeed they are. But if you guys are enjoying the stream tonight, feel free to leave a like on the video and subscribe to the channel if you are new. We usually do these streams around 5 days a week between New York City and Miami and talk about finance. We'd love to have you guys come back. I think what we'll do now is let's go to the other side of the south side of Penn Station, and we'll say hi to our pal Billy Joel. We haven't been here in a minute. Mike C, good to see you, welcome. So everybody, just a quick review today. We sort of got sidetracked here, but I think it was a good conversation we had. We were briefly talking about the fact that I think we unanimously agree on the streams here that you should not be allowed to trade individual stocks if you are a sitting member in Congress. I think we all unanimously agreed on that. I think that's something both Democrats and Republicans, conservatives, liberals can agree on, at least the ones that are not in government, right? I think if you're in government currently, you're probably not going to agree on that because you want to pad your pockets a little bit. But I think for us who are not in government, I think we could all agree. But the real topic for tonight's stream, everybody, and we'll cross the street, I think we got the light, was today is the first business day of the month. Okay, so July is in the rearview mirror. It is the official first day of August, first business day of the month. So that means the ISM, so the Institute for Supply Management, releases their Purchasing Managers Index, or the PMIs. That reading came in at about 52.8%. But here were some of the highlights from the report. So here are some of the highlights from the PMI report. So new orders and employment are contracting broad-based across the board in the United States manufacturing sector. So new orders and employment are continuously contracting. Production and backlogs are growing. Supplier deliveries are slowing at a slower rate. So deliveries are slowing at a slower rate, which is actually some good news. Raw material inventories are growing. Customers' inventories are too low, which is actually pretty interesting, and we'll talk about why. Price increasing at a slower rate. So obviously that is good news as we talk about the upcoming CPI number, the Consumer Price Index. So from the PMI report, it's showing that prices are still growing, but we're seeing deceleration in price growth, which is good, which that means that potentially the Federal Reserve raising interest rates and causing that demand destruction, they could be working to get down inflation. We'll talk about that a little bit later as well. And record long lead times for production materials and MRO supplies. And I think I agree with that as well. Because as you guys know, I said I'm in tech sales. A lot of the times when we have to order custom built hardware, they'll say, okay, the lead times are 6 to 8 months. I'm like, still? It's insane. So technically, as we look at this number at face value, for those of you who are not familiar, the reason why looking at the Institute for Supply Management manufacturing ISM report on business is so important is because generally speaking, the manufacturing sector of the US economy is about 16 to 20% of GDP. So the correlation there is if the manufacturing sector is expanding, well, that means the economy is very healthy, thus stock market returns should be positive and vice versa. But even though we got a 52.8 reading, technically that means the US manufacturing sector is expanding, but we're seeing extreme deceleration here. So if we look back to February 2022, we had about a 58% reading on the PMI. In March, we had 57. April, we had 56. May, I think we had a little bit of a bounce at 57. And then June, we got all the way down to 53. And now for July, we are down to 52. So even though if you just looked at this at face value, you'd say, oh, okay, everything's great, it's slowing down. No, the PMIs have been rolling over here for the last 6 months. And that essentially means there's a direct correlation between lower equity prices, right? So if you pull up a chart of the S&P 500, we're about to walk past Billy Joel over here, by the way. As we pull up a chart of the S&P 500, I want you guys to notice the exact point when the S&P 500 and the NASDAQ and the Dow started to roll over. It was right around when the PMI numbers started to decline. So you'll notice right after the new year, January, February, March, April, May, this is when we've been in that bear cycle, and that's exactly when the PMI started to roll over. So something to keep our eyes on there. But we are now outside of the Madison Square Garden, and we always say hi to our good pal Billy Joel. He says Madison Square Garden is the center of the universe as far as I'm concerned, and I agree. I would agree. Brad's Brain says, what report tracks service sector growth? Any idea when that's out? I think that's coming out later this week. And many people think that that's a more important reading, obviously, because our economy here in the United States is more geared towards services. And I think that's pretty obvious, right? We have exported a lot of our manufacturing capabilities abroad or overseas. Hey, Robert Sandoval, good to see you. Robert says no, Times Square is the center of the universe. That's up for debate. Hey, Vonda is here. Good to see you, Vonda. This is Tom. I don't understand the thing you're saying, but I still watch you all the time and enjoy it. Well, Vonda, I appreciate that very much. You're always welcome here. We love to have you. We love to see you in the chat. And hopefully you're enjoying the beautiful sights and sounds of New York. But this building right here is the brand new Moynihan train station, but they actually left the old post office intact here. So this is actually one of my favorite buildings in the city. Before the Moynihan train station, it was actually an operable post office. It actually still is, but that was the sole use of the building, was just a post office, USPS. But now it is a brand new train station, state-of-the-art train station. Dr. House says, hey Tom, which camera are you using? So we stream with an iPhone 13 mini. iPhone 13 mini. We'll take one quick lap around Moynihan and then let's head to Little Italy, everybody. I want to check out Little Italy tonight. Liminal says, Walks on Wall Street, what do you think of using super advanced robotics, hand and eyes, and AI to make U.S. manufacturing center again? Well, I think that's already starting to happen, right? I think that's already starting to happen. So Liminal, to your point, do you want to know something interesting? And I think we covered this already on the stream. In 2021, Amazon spent more money on research and development than ever before on robotics and AI for their warehouses. And why might this be? Well, if we think about what happened during the pandemic, employment has been running white hot, and employee retention has been so difficult to come by for a lot of these big corporations. So a lot of people are quitting, a lot of people get hired and they only stay for 6 months and then they find another job. So employee turnover is at the highest mark it's ever been in American history. So this has actually encouraged large corporations, mainly in warehousing, 3PL logistics and manufacturing sector, to invest record amounts of money in the billions of dollars on automation, on AI, to really automate their processes, because they're like, hey, instead of paying our workers more and attracting people with sign-on bonuses and incentives, why don't we just spend this money for the long term, where we can make all of our production, all of our manufacturing, all of our 3PL and shipping done via robotics. So I think in 2021, you could actually look this up. If you just go to Amazon.com/investor relations, and you pull up any of the investor decks, any of the 10Ks, the 10Qs, you'll actually see the R&D budget has never been higher for robotics, artificial intelligence, and just robotics in general. And that's not exclusive to Amazon, right? This is broad-based. And I think as software continues to eat the world, you're going to see this trend grow. So I agree. I agree with you 100%. The American School of English's Jim Crow told people to take the first job offered to them or lose unemployment. That is what drove employment. Interesting. Nirvana fans is good. Let those jobs go so we don't have to. So Nirvana fan, I actually have your exact opinion on that. So a lot of people may jump up and down and say, hey, this is horrible, you're automating a lot of these jobs away. But if you look at the data, you look at the statistics, the way society evolves is for every job that is destroyed by AI, machine learning, robotics, there's going to be about 10 jobs that are created. However, they may require a different set of skills to perform those jobs, right? You're going to need probably more software engineers. I think you could probably call it a crisis of a lack of data scientists, software engineers in the United States. So if you want a job, definitely, try to brush up on your coding skills. But I don't think it's going to be all that bad. I'm under the impression that you should never hinder or hold back innovation just because there's going to be some short-term turbulence here in the job market. And that's why I'm actually, you guys may be surprised to hear this. I actually agree with a particular politician called Andrew Yang, and you would be very surprised to hear that because, obviously you guys know I'm a pure free market capitalist, but Andrew Yang actually makes some good points. He's like, we need to prepare our society and retool and retrain our people for a new economy, right? We just have to be totally open, honest, and transparent about what the new economy is going to look like, and that's going to be autonomous driving. That's going to be robotics and 3PL and warehousing. That's going to be cloud computing. and we need to spend the money to retrain and retool our workers in the United States in order to sustain employment. And I agree. Man, check this out, everybody. So this is a view of the Empire State Building from 33rd Street and 8th. Fantastic view here. So Dusty Cole says Tom Yang is for universal basic income too. So here's where you guys might be equally as surprised. I am for selective UBI. Not to get too political, but I am for selective UBI. So if we can be rational about it and look at the broad swath of the population that is going to be more exposed to job loss from automation, from AI, from machine learning, I think we should create some sort of an investment fund or education investment fund for those people to be used to go back to school, maybe go to a trade school to learn these new skills so they can assimilate into a new economy. The last thing we want to do is just have a bunch of job destruction and then a bunch of people with no necessary skills to survive in a new economy. That's not what we want. What we want is to work together to retrain and retool our workers so they can assimilate into a new workforce. But that's just my 2 cents too. A different takes is great news. Train station and new terminals at LaGuardia too. Can't wait. So a different take. What do you think about the Long Island Railroad is actually going to go to Grand Central Station now? Did anybody hear about that? So I know we've been talking about that for a while, but supposedly it's going to come to fruition. Grand Central Station is going to be accepting Long Island Railroad trains. I believe it's called the East Side Access Project. Supposedly it's going to start at the end of the summer, so a couple months. Let us time out the spam. I'm seeing a lot of hello from Brazil. Good to see everybody from Brazil. So I think this is the money shot here, guys. Check this out. Okay, I'd say this is probably like a 9.7 out of 10. Probably a 9.7. What do you guys think? So Disney Matt says, when did the new subway cars come out? I'm actually not sure about that. But Disney Matt, we are getting new Long Island Railroad cars. They're starting to roll out, which are awesome. Yeah, Wendy England says, swear I'm right, the bots always show up around 700 viewers. I agree. David says, New Haven Metro North coming to Penn Station. No way. Really? Dude, that'd be awesome, man. War Walker says, I thought the LIRR already flew out of Grand Central. No, not yet. Hopefully soon. Hopefully soon. Man, the Empire State Building just changed to the classic white. Maybe as we walk down, it'll change back. We'll see. Cindy Foley says, beautiful. Good to see you, Cindy. Welcome. D Hot says, you always have great views. I appreciate that. I appreciate that. So lastly, everybody, in relation to the PMI numbers, I always say, what is the most important thing to look for in this report? Here, I'll put you guys down in front of this amazing view here. Yeah, flat smacks like the Empire State Building looks like a rocket's about to take off. Yeah, I agree. So the number one thing I always like to look at, so if you guys just Google ISM manufacturing report, PMI numbers, you could actually go right to the website and read the report yourself. And what I want you to do is scroll down here. Again, I have the notes, so if anybody gets upset, too bad. What respondents are saying. This is the most important and critical part of the report. So let's take a look at what some of the respondents are saying. And here's why it's the most critical part of the report, by the way. Because you're actually getting a first-hand look at what some of the largest manufacturers in the United States are saying about the economy. They're literally telegraphing you what's going to happen, literally. So as we know, as the PMI numbers roll over, if we've been paying attention to the streams, a lot of the verbiage or a lot of the respondents are saying, hey, we're a little light on orders. We had a ton of pull forward during the pandemic, and now nobody's really ordering. So we've been hearing a lot of that verbiage for the latter part of the past 6 months. But let's check out the second one down. It says, inflation is slowing down business. Overstock of raw materials due to prior supply chain issues and slowing orders. This is coming out of chemical products. So again, let me read that and then we'll review what it means, because this is critical here. So inflation is slowing down business, overstock of raw materials due to prior supply chain issues and slowing orders. So we know this particular person is not lying, because what have we been talking about for the past 3 months on the stream? We've been saying there's a possibility that the CPI print may start to come down here. Now, last month's CPI print was right at 9.1%, and I've been saying I think we're going to start to see the CPI come down a bit, at least core CPI. And here's the reason. If you look, again, if you go to tradingview.com, it's completely free charting software, click on the commodities tab and look at the chart of all of these commodities here. You have copper rolling over, you have crude oil rolling over, right? In March, crude oil hit a high. If you look at the futures contract, ticker symbol CL, we hit a high of about 130. We're trading at $95 a barrel right now, which is good news, right? Which is good news. So usually the charts are the leading indicator, and the PMIs, if you listen to the respondents, they're literally telling you what's going to happen. So they're saying inventories are stacking up, we have an oversupply of raw materials, an oversupply of commodities, therefore the commodities are going to come down, especially a lot of the precious metals like aluminum, palladium, titanium, things like that. But that's not exclusive to each particular part of the business. There could be some exceptions. So let's see if the Empire State Building turns. I want to see it turn back to the rainbow again. Yeah, so this isn't my real name. Google says, Tom, the big law and accounting firms here in New York City are also very lucrative. Just wasn't for me though, personally. Yeah, you're actually very right about that. Like EY, I think EY is right here. I think they have an office here. Oh, this is Accenture has an office here. Oh, and EY as well, right here. But yeah, like the management consultants, absolutely. Somebody says this is the rainbow for Pride Month. No, I think that was in June. So the rainbow for Pride Month was in June, I believe. This is for Jerry Garcia. So let's see if the Empire State Building changes. I think it's for Jerry Garcia. I think so. Yeah, Penelope's like keyword supply chain issues. So check this one out, a respondent from the food, beverage, and tobacco products industry in the United States. Ah, there we got it, it just turned. So from the food, beverage, and tobacco products, it says, and I quote, growing inflation is pushing a stronger narrative around pending recession concerns. Many customers appear to be pulling back on orders in an effort to reduce inventories. So it seems like a lot of people, a lot of consumers are saying, or going to their OEMs, right? Well, as a tech person, I like to say OEM, and saying, hey, you know, we're seeing 2 consecutive quarters of negative GDP. We don't know if we're going to place a big order with you because we may see consumers pull back on spending. And I think we saw this exact thing happen when Walmart reported earnings last week. So what did the CEO of Walmart say last week? You know, let's actually check out. Ooh, they closed it down, everybody. That's unfortunate. Remember, this was like the lemon world over here, if anybody remembers that. I think they closed the whole thing down. But anyway, Walmart, the CEO of Walmart said that consumers that shop at Walmart are changing their consumption behavior. So, for example, let's say if you go to Walmart and you buy Tide detergent, right? That would be a name brand product. Let's say if you go to Walmart and you buy, you know, a Captain Crunch cereal, for lack of a better name, because I'm not a big cereal guy. They're shifting towards more store brand stuff. So that means consumers are starting to feel a pinch here. Is this Christmas stuff already? It kind of looks like it, doesn't it? But anyway, it signals that consumers are starting to see a pinch here, and that could translate to, okay, if everybody's just buying store brand stuff, you know, maybe we don't need to place as big of an order for the name brands, and, you know, vice versa. You could pretty much solve for X in any of the equations. Yeah, Ruby Falcon's like looks a tad creepy. It kind of does. So let's see what it's called. A colorful dream. this is called. Interesting. Mike C says, Tom, do you think they have the control to push bad news to Q2 so things look rosier in November? So I don't think there's any sort of manipulation going on here, but here's what I will say, and here's what I think may be happening, which actually would set up good for the market in general. Here's what I think may happen. Obviously, the Federal Reserve is raising rates. Obviously, everybody is scared about a recession. I think, again, not to get political, it doesn't matter. I would consider this, we're already in one, right? There's the debate that says, oh, since the employment and the job numbers are running hot, the employment rate is at an all-time record low, it can't be a recession, to which I would say, I think the unemployment rate is a little bit misleading. I think the better economic indicator to look at is the labor force participation rate, which has not yet recovered from the pandemic. So that's why I'd say we are in a recession. Here's what I think may happen, and here's why I think we could have a big stock market rally in 2023 to 2024. Man, the Empire State Building looks like a 11 out of 11 tonight. Here's the best case scenario. Earnings matter. Remember that, earnings matter. And of the S&P 500 companies that reported earnings so far this earnings season, over 79% of those beat on profit estimates. So that's just the facts. And if you look at Microsoft, if you look at Apple, if you look at Alphabet, they blew it out of the water as well. So what I would like to see is for this market to make one more low, which I think is very possible, to break the lows, in which case the midterm elections will all sweep over. What I think is probably going to happen, I think it's going to be a red wave. I'm not saying that's what I want, that's what I think is going to happen. I think both houses of Congress will be controlled by the Republicans. And again, what have we said? If you look at the data in relation to the best stock market environment for returns, it is when you have a Democrat as a president, which we have President Joe Biden, which is a Democrat. And if you have Republican control of both houses of Congress, if you have those two things, that's the magic elixir for stock market returns. And I think it's a pretty high probability that we may get that. I'm not under the narrative or that Joe Biden's going to step down and Kamala Harris is going to take over. I think that's all fake news. Joe Biden's the president. He's going to run again. And that means after midterms, we could have the perfect environment. We could have the perfect political environment. And we could also potentially have the perfect monetary policy environment for turbocharged returns. And the reason why I say that is because, reverting back to the Neil Kashkari interview, he says they are going to go gangbusters on raising rates. Last week we got a 75 basis point rate hike. I think they're going to do the same thing the next month and the next month and the next month, in which case that'll probably bring the Fed funds rate target to about 4% by the end of the year. That's going to be total demand destruction. Then after that, they could start quantitative easing again. They maybe cut interest rates. Maybe they start to buy bonds and buy mortgage-backed securities again. So it's very possible a situation like that may play out. But again, I think that is like total speculation. I think it's important for us to let this earnings season play out a little bit, but that is definitely a possible scenario. Or another possible scenario is the bottom's already in right now. But earnings actually haven't been that bad. To be honest. The American School of English says you only need to either actively searching for a job to be employed at least 1 hour a week to be considered employed. I don't know about that. James's demand destruction sounds scary. Well, I think we're already starting to see demand destruction, right? And I think that's why we're seeing crude oil come down here. But who knows? I mean, just looking at the fundamentals, Alphabet had a good quarter. Microsoft had a good quarter. So a lot of the enterprise tech, a lot of the cloud computing. That's why I think for individual stock selection, I still truly believe that cloud computing, you need exposure to cloud computing. And the top 3 dogs in the space is Amazon AWS, Google Cloud, and Microsoft Azure Cloud. I think cloud computing is in its infancy of growth, in my view. Hey, Sadiq says, hey Tom, good to see you, Sadiq. Good to see you. So you know what we'll do tonight, guys? We're gonna walk across the street, across 10th Avenue. We're actually gonna check out the vessel. I haven't been here in a minute, and then we're gonna head down to Little Italy, and then we will conclude the stream. But I haven't seen the vessel in probably over a month, so I think it'll be cool to check it out. Hey, Laura M is here. Says, Tom, did you know that Apple, Google, and Meta are opening offices in the Triangle in North Carolina? I did not know that. But that's good news. That's good news for people who live in North Carolina. That's awesome. You know, you're not the first person who's been keep poking my ear about North Carolina. Supposedly, there's a lot of good jobs, a lot of industry, a lot of population growth going on in North Carolina. South Carolina as well. Hey, Motivational Mafia says, hey buddy, what's up? Good to see you. Welcome. Roberts' Oracle is laying off thousands. You know, Shopify, I believe, also came out here and announced that they're laying off about 10% of their workforce. Did anybody see that as well? And I believe I don't want to say the exact words of the CEO, but he said we had a really, really big miscalculation. So. Yeah, I'm seeing a lot of people in the chat says, yes, Carolinas are doing great. So this building that we're looking at right here, everybody, this is actually a hotel. It's the Equinox Hotel. You could think about like the gym, the Equinox gym. And supposedly these hotel units are like $1,000 a night. In this building right here. And here we have the vessel, which is another beautiful, beautiful sculpture in New York City. This isn't my real name. Google says walks from Wall Street. Google is also tightening hiring and implementing measures to make sure employees are more productive, says the CEO. I did see that as well. You know, it was interesting. Did you see on Apple's earnings report, Tim Cook came out and said, even though they're seeing economic headwinds, they're still going to hire, but just maybe at a slower pace and be more selective in their hiring. So I think it's broad-based, right? I think it's probably pretty broad-based. You know, the housing market is starting to come down here a little bit, but we briefly talked about this last night, and I think I want some input from you guys, the viewers, because we have a pretty big audience here from all over the United States. So I tend to have more exposure, obviously, to the markets in New York and Miami, but I'm interested to see, I wrote some notes here, I'm interested to see what everybody else has seen in the market, and here's what I mean. So if you look at the statistics, you look at the data, during normal times, not crazy COVID times, the time a house is on the market towards the time it sells, it takes about, I think 90 to 180 days for a house to sell. So in your neighborhood, wherever you are across the United States or around the world, maybe you're in Canada, are you seeing a little bit of a cooling here in the housing market? And what I mean by that is, if your neighbor puts their home on the market for sale, is it selling in 2 weeks or is it sitting a little bit more? Fredex says nope. Interesting. Yes. Hey, Steph Wright is here. Good to see you, Steph. Yeah, so we're standing right outside of the vessel here. Motivational Mafia says the average rent in Manhattan crossed $5,000. Yeah, that it did. You're right. Wendy England says, like I said last night, Vancouver housing is still crazy and little inventory. Interesting. Clunky Chunks says lots of big tech is run by boomers who prefer in-person micromanagement that believes that work from home makes most employees more productive, or that think works from home doesn't make employees productive. But yeah, I think you're right. I think you've seen the more, like, anytime you talk to a startup, they're probably going to be more open to work from home, or just a forward-thinking CEO like Mark Benioff or something. Melissa 2087 says, Tom, I heard it was cheaper to live in Manhattan than an apartment in Jersey City. I still think it's cheaper to live in Manhattan, to be quite honest, but I could be wrong. But Jersey City is actually pretty nice. I've been to Jersey City a couple times. Atomic Skittles says, Tom, homes where I live are still selling very fast after being put on the market. So the reason why I bring that up is I told you guys the story. My friend calls me up, or my friend sends me a text. He's like, hey, I'm sort of panicking here. I think I'm in a bad spot. My house isn't selling. And the first thing I asked him is, well, how long has it been on the market? He comes back, he says 2 weeks. I'm like, okay. So my theory on the housing market, and again, this is just opinionated stuff. This doesn't mean it's going to happen at all. We just sort of talk back and forth on the stream. And it's what I said yesterday. What I think is going to happen in the housing market, I don't think we're going to see a housing crash. Right? You see all those videos on YouTube, the housing market's going to crash, it's going to be Armageddon. I don't think so. What I think is going to happen is all of the very, very hot markets like Miami, Florida, Fort Lauderdale, places like Dallas, Texas, Austin, Texas, some isolated markets in California like San Diego, California, and Denver, Colorado, many more. Those are the neighborhoods, or those are the pockets of the housing market where you're probably going to see a 15 to 20% correction. You probably are. And the reason for that is because they had a ridiculous amount of price appreciation in the span of like 24 months. But I think everywhere else in the United States is probably just going to go back to normal. And what I mean by back to normal is if you list a house for sale, it's not going to sell in 2 weeks. It's not going to have 20 offers over asking price. It's probably going to sell in a normal time frame of 90 days to 180 days. That is what I think. Again, I could be wrong, but that is what I think. But I think that's going to shock a lot of people. I think that's going to shock a lot of first-time home buyers. I think that's going to shock a lot of Gen Z people, because the pandemic has programmed them to think that the housing market is like stocks, where it's extremely liquid, where you could put your house on the market one day and then it sells in the next, and there's a bidding war for it, right? The housing market is not historically like that at all. The seller actually has to do some work. The seller has to take nice pictures, they have to mow the lawn, they have to put their cat and dog away, you know, things like that. Ariel says, it is cooling, but I think it is a seasonal thing. Most people move before school year and restart. I live in Western Florida. That's a good observation there. So maybe it's just seasonal. Ramsey says, hello, Tom. What's up, bro? Best greetings from Memphis, Tennessee. So Memphis is also another pretty hot housing market too. Love Memphis. Love Memphis. Wow, Steph writes, says, Tom, just don't move to London either. Houses are £1 million plus. Whoa, it's insane. James's prices always pull back around. That is true. Yeah, I think you could just have a mean reversion, right? Here's what I am seeing though, and I think you guys are going to get a good laugh out of this. I think some sellers, and let's head back this way because I think it's going to get a little bit too dark for you guys in the stream. Atomic Skittles, I think the high line just closed. So I was looking at it, I think the high line just closed, unfortunately. Hey, Wesley West is here. What's up, Wesley West? Long time no see, dude. Always a pleasure, always a joy to have you on the stream. What I think you're gonna have, and I've been seeing like 20% price declines across the board, but these are like 3-bedroom, 1-bathroom homes that are in shambles that these people put on the market for like 600 grand. And then you'll go on Zillow and it'll say, oh, price reduction of $100,000. I'm like, yeah, even that's overvalued. So I think that kind of stuff is going to skew the statistics as well, because there's a lot of people out there that have probably had a home in their family for generations, 3-bedroom, 1-bathroom, the thing's falling apart, And I'm looking at these Zillow listings, and they're putting them up, and it's like $600,000 for a 3-bedroom, 1-bathroom home. I'm like, oh my God. And then, a month later, you'll check back, and then the price is slashed to $100,000. I think you're going to see some of that stuff, obviously, but. FZ says, guys, I'm planning to travel to the United States, New York or California for my first trip. What do you recommend? New York, 100% all day, every day, my friend. And I'm definitely not biased when I say that. Definitely no bias there. Nicholas Dura. No, Nicholas, it's interesting. So Nicholas is like, have you heard of this, the Empire Outlets, fairly new in Staten Island? I have not. I have not. Emmanuel says, Tom, as interest rates rise, prices will drop. Yeah, I agree. So Emmanuel is right. So the correlation there, if you look at a 30-year fixed rate mortgage, I think the going rate as of the close today is like 5.3%. They've actually come down quite a bit. So interest rates have actually come down quite a bit on a 30-year mortgage because we've been seeing steep declines in that 10-year U.S. Treasury yield. So June 22nd, if you guys pull up a chart of the 10-year U.S. Treasury yield on TradingView, what you'll see is June 22nd, I think, was the top of about 3.457% on that 10-year U.S. Treasury yield. Since then, we've reverted all the way back down under 3% to like 2.6. So as we know, the 30-year yield on a mortgage moves in lockstep pretty much with the 10-year. So borrowing costs are actually coming down a little bit, as opposed to what many people want to say. I think the question is this a full-on top in rates? I don't know. I think we're going to have to find out. Dr. Longus says, no crash like 2008, different circumstances. I agree. And I think the underwriting standards are a little bit better in the United States, for sure. Hey, Guzman is here. He says, hey, Tom, all good. Greetings from Uruguay. Good to see you, Guzman. James says, California buyers bid prices around me, all them up, and they will take prices back down if they pull back. James, what part of California, if you don't mind me asking? Oh, Ramsey says, I'm from Memphis here in Egypt. Even better. Love Egypt. Hello to all of our Egyptian viewers. Everybody, we have the one, the only Cosmo Scary. Cosmo, good to see you. This is happy August, Tom. Good vibes all around. Good to see you, Cosmo. Hopefully your July finished off good. Hopefully you had a good day today. Yeah, photos around New York is like in 2008, the last thing on my mind was the stock market. That's true. Wesley West is Vegas here. Love Vegas. You know, Vegas was another one of those places that benefited a lot from COVID. A lot of people moving into Vegas. Vegas is a great town. I don't know if I could ever live there though, because it's just too hot and dry. But love Vegas. But if you guys are enjoying the live stream tonight, if you like the topics, if you like the views in New York, feel free to leave a like on the video and subscribe to the channel. Hit the subscribe button if you are new. Hey, Jonas here says, hey Tom, good to see you. Good to see you as well. Running at altitude says homeowners are quickly seeing their equity diminish in some markets. Yeah, I think in select markets where people were doing crazy stuff running at altitude. But I think you're right. I think the people who are starting to see some of their home equity diminish right now are people who did all of the things that we advised against on the stream. So number one is get into bidding wars. We've been saying this ad nauseum during this housing boom. We said, do not get into a bidding war with anybody. Never under any circumstance waive any of the necessary inspections. ever. And be patient. The people who didn't do those three things are probably hurting right now, unfortunately. But, you know, markets will do that. As people get antsy, they think the house is their dream home and they have to get it. But at the end of the day, you know, one of my good friends said something that was really resonated with me. And he said, at the end of the day, you have to realize that there is literally a house on every street corner in America. So there's no rush to get the perfect one. There's literally one on every corner in America. So there's no need to overpay and outbid somebody and waive a bunch of inspections. But running an altitude, I think you're right. Ridzi says, come to Columbus Circle. You know, we were just up that way. Maybe we'll do that tomorrow, but Columbus Circle is one of my favorite parts of the city by far. Uni J22 says Union, New Jersey housing is sitting longer in Union, New Jersey. So is that Union County, New Jersey? You know, I've actually done some work with them. Union County, New Jersey. Big shout out to everybody in New Jersey. Harry Dominguez says, Tom, do you think we are in a recession? Yes, I do. I do. Atomic Skittles says, Tom, do you think Peloton... Oops, I just lost your comment there. Could you repost the comment about Peloton? I think Oh, do you think Peloton is a pandemic fad? Absolutely. 1,000%. That's a really good question. So, let me see who said that. So Atomic Skittles says, do we think that Peloton is a pandemic fad? And yes, I do. And if you watch CNBC, you probably know of a gentleman named Carlo Quintilla, the anchor. Hopefully I'm pronouncing his name right, but he is the anchor on CNBC. He's a good person to follow on Twitter. So if you guys utilize Twitter and you want to connect while we're off the stream, please connect with us over there at Walks Wall Street. If you have Twitter, you could follow at Walks Wall Street. I'm usually posting things throughout the day. But he posted a chart out of the Financial Times that was really, really interesting. And the chart went something like this. I think I actually retweeted it. It was the amount of people who were cooking at home during the pandemic and the amount of people cooking at home now. And it's literally like a hockey stick chart up and to the right. So humans very seldom will change their long-term habits. So I think a lot of the things that were the norm during the pandemic are going to go back to normal, right? People get lazy. They don't want to cook at home. You know, it usually lasts like 2 months and then, you know, you don't cook at home anymore. I mean, even for me, right? Even for me, I could admit it. Sometimes I'm like, you know what? I'm going to save money. I'm going to get into a good routine. I'm only going to eat healthy stuff. So I go to the Stop and Shop or the Whole Foods, assuming on how big my commission check is, just kidding. And I buy a bunch of food. I'm like, you know what? I'm going to cook this at home. Yeah, it lasts like a month, maybe. And then you're back, and then you're back to ordering stuff and going out to eat. I can't be the only one, right? I can't be the only one that's guilty of that. Anyway, but yeah, so the chart was pretty interesting. During the pandemic, for about 2 months, people started to cook from home and order in. And now everybody's all back out to the restaurants now, which is exactly sort of my behavior. Bill says that is how gym memberships get you. Yeah, that's true. So the goal of the gym is to overbook to Bill's point, the goal of a gym is to overbook the amount of people who use the gym. So for one location, you can have 1,000 people because you know that only like 10% of them are going to go. That's a good point. That's actually a really good point. Dusty calls like, come on, Tom, you could do 5 nights a week of cooking leftovers. Dude, I mean, it's difficult, man. I'm not gonna lie. I'm not lying. It's difficult. Harry says, so do you think the markets have more room to drop or the bottom has been priced in? So I gave my scenario. So I'll tell you what I would like to happen. I would like for this market, and I'll say it again, I think we went over this, but you're right. I think the market has one more leg down. And if we look, if you guys read Barron's, there was an amazing article this week in Barron's. And essentially what the article said was the S&P 500, the Dow Jones Industrial Average, and the NASDAQ has now rallied about 10%, 12%, and 16% respectively. And here's the interesting thing. Wow, take a look at the Empire State Building here. And the interesting thing is that is usually the average amount, if we look back to 1955, that is the average amount of a bear market rally. So if we start to roll over here and we make a new low, well, then it's a normal bear market rally. So I think we're going to find out sooner rather than later. If you look at a daily chart of the S&P 500, we're making a little bit of progress here because we did break above the 50-day moving average, but we are still well below the 200-day, which is concerning. These things are so cool. Beautiful horses. So we're definitely in a recession. The reason why I disagree, and not to get political, but the reason why I disagree with the current administration when they say we're not in a recession, and their argument is because employment is very, very strong. The only reason why I give pushback on that is because if you really, really analyze the data, you'll know not to look at the unemployment rate. The unemployment rate is very, very misleading. It is true that the unemployment rate is near all-time record lows. That is correct. But in my opinion, in order to get a more broad-based gauge of the health of the average American and the average health of the job sector, or jobs in general, is the labor force participation rate. And the labor force participation rate is still not back to where we were before the pandemic. So that means there's less people working, or less people back to work. Now, I do understand the argument that that could be by choice, right? A lot of people chose to retire early. A lot of people just chose to take some time off. I get that. But I think that 2 consecutive quarters of GDP contraction is the definition of a recession. I understand that there's some nuances, but based upon the inflationary pressures we're having, based upon the direction of monetary policy, which is very clear, which is interest rates are going higher, the balance sheet is going to unwind. Based upon that criteria, I think it's safe to say that we're in a recession. But again, up for debate. Yeah, Nicholas Duras says brave men in blue riding horses. Love that. James says fewer people are working for sure. Unemployment rate is bogus. Man, that's just an awesome view. I mean, you can't get this anywhere else in the world. So this is the corner of 33rd Street and 8th Avenue here, overlooking the Empire State Building. Absolutely beautiful. Hey, the ABX girl, says Tom, I have the Peloton app, and it's helpful for those who do not want a health club membership that you must drive to. A membership in North Carolina is close to $200 a month. Oh my God. The Peloton is now less money. Well, that's actually a good piece of information there, the ABX girl. That's a good point. So ABX girl, where you are in your neck of the woods, do you have any like Planet Fitness or anything like that? Because Planet Fitness is usually what, $10 a month? Or has it gone up? Has Planet Fitness gone up, or is it still $10 a month? Yeah, somebody said awesome view, so-so soundtrack. I agree with that. Jeff W22 says, but even the labor force participation rate is trending higher. No, it's not as high as it was pre-pandemic. Saying it's not high enough reminds me of Mitt Romney bashing Obama in 2011. I think that's actually a pretty sound argument, Jeff. I mean, is it not? He's right, it is trending higher. I mean, it's a sound argument. I can't say he's saying fake news. It's not. It is trending higher. But again, my thing is, a recession doesn't necessarily, so I'm very different than most. I tend to look at things as a financial analyst, not as a political analyst. So I don't really have biases on political opinions. So the reason why I say we are in a recession is not to say, oh, it's Biden's fault. And I think we went into this a little bit before on a couple of the past live streams. This is why I think we're going to have the perpetual cycle of influence of presidents on the Federal Reserve, right? When Donald Trump was in office, Trump was the number one culprit of this. Fed Chairman Jerome Powell, he wanted to do the right thing. Fed Chair Jerome Powell said, look, the economy is running hot. I want to raise interest rates. And what happened once he did that? The market started to roll over. This was in 2008 during Christmas time. And Donald Trump came out and said, you know what, I'm going to fire Fed Chairman Jerome Powell, which you can do that, but you're not supposed to influence Fed policy. They're supposed to act as a separate entity. So essentially, Trump was influencing Fed policy to say, you need to stimulate, you need to print a bunch of money so the stock market can go higher so I could point at the scoreboard. Democrats do it too, Republicans do it too, and I think that is very disingenuous to the American people. So Jeff, you are right. So the reason why I say we're in a recession is not to point my finger at Biden and say it's all your fault and jump up and down. I'm just looking at it based upon historical trends, generally speaking. If you look at inflationary pressures, if you look at GDP contraction, if you look at the CPI, this means we're in a recession. It doesn't mean the boogeyman's here and America is going to fall apart. It just means we're in a recession. That's all. But it's a good point. It's a good point. Very good point. I'm very against, on both the right and the left, when presidents try to influence the decisions and the policy of monetary policy. You can do all you want with the fiscal side of the house, but don't try to manipulate and pull strings at the Federal Reserve, because that's essentially cheating. It's a managed market. And that's not free market capitalism. That is crony capitalism. And that creates an environment of corporate socialism. Wow, check out this view, everybody. Because if you allow cheap money to perpetuate, you're going to get exactly what we have in like the Russell 2000 with zombie companies. But I digress. Troy 1995 says, will Pelosi visit Taiwan make inflation worse? I don't think so. I don't think so. And I don't really think that'll affect the financial markets. I think if the market rolls over here and makes another low, they're going to blame it on China. They're going to blame it on Pelosi and the political climate. I don't buy it. But again, I could be wrong. Yeah, Dusty Cole says the Fed needs to be left alone. Exactly, I agree. Well, they're supposed to operate as a dedicated, separate entity. Steph Wright, always a pleasure to see you. So for those of you who are curious, this is usually where I go home right here. So this is the Long Island Railroad. NMB045 says we have politicians in Canada who also say they will fire central bankers. Yeah, I think that's I think it should be a self-regulating entity. Well, I mean, if you ask me, I think we should abolish the Federal Reserve. But that'll never happen. So the next realistic thing would be, I don't even think there should be any sort of talk between the Fed presidents and the president or politicians. Hey, Herbert Daughtry, thank you so much for the $2 donation. You are way too kind. Says, Tom, I'm trying to work here, but you're distracting me. I apologize for that, man, but we appreciate you being here, and thank you for the donation. I know I'm probably killing you guys with this view of the Empire State Building, but it's just too good tonight. It's just too good. Javier, good to see you. Yeah, Don Smith says the Fed equals crooks. Agreed. Dr. Longus says, will Pelosi get in trouble for insider trading? Probably not. Probably not. And again, to be fair, she is a big culprit of it, but Republicans do it as well. Let's just get rid of the spam bot. But I think the recession may be quite mild. Hey, Peace says, why can't it be a mild recession rather than a great recession? People freak out about the world recession too much. Dude, if I could pin your comment, I think that's the comment of the night. I think ever since 2008 really scared the crap out of people. And let me know if you guys think I'm right. I think 2008 really scared the crap out of a lot of people. So anytime we have a little bit of a fluctuation in the market, anytime the housing market cools off a little bit, everybody's like, oh my gosh, it's another 2008, it's another Armageddon, and everybody freaks out. I think we could have normal corrections. The market is supposed to go up. The market is supposed to go down. We always have these periods of irrational exuberance that is exacerbated by the Federal Reserve. And since the lows of 2008, all you have to do is just watch the Fed balance sheet. If the Fed balance sheet is expanding, which means if they're buying mortgage-backed securities, if they're buying US Treasuries, that probably means that the stock market's going to go higher. It probably means that corporate earnings are going to go up. But as we go into a quantitative tightening cycle, that probably means the reverse, and that sort of ties into the topic of the stream tonight, which is the PMI numbers. So the Institute for Supply Management, they'll post their PMI numbers, which is the overall gauge to see how healthy the manufacturing sector is in the United States. As the manufacturing sector rolls over, you're literally looking at the business cycle in real time. So this is why I always say it's important the first business day of every month, which is today, August 1st, you'll release the PMIs. And ever since February of 2022, we've had readings from the PMI of about 58 all the way down now to about 53. So they're rolling over, thus the stock market's going to roll over. You can literally see the business cycle in real time. And I think this is normal, right? It's normal. In order for the economy to grow sustainably long term, it needs to have normal corrections. Bot says, will CPI data of July be higher than 9.1%? What do you think? All right, so we might as well guess that in the chat. So everybody in the chat, what do you think that the next CPI number is going to be? I think it's going to match this month. I think we're going to get the same reading, about 9.1%. I could be wrong, and here's the only reason why I think I could be wrong here. And that is because rents are still going gangbusters to the upside. And the reason for that, I think, is that the interest rate on that 30-year fixed rate mortgage has gone up. So if people aren't buying, what are they doing? They're flooding into the rental market. So it was sort of, this happened at the worst time possible, because as everybody was rushing to the housing market, bidding up the prices of houses, then interest rates went up. Everybody's like, oh wait, now I can't afford a house. Quick, let me go rent something. And now everybody's slamming into the rental market, bidding up the prices of rents. So I think the rental prices alone are really going to sting in this next CPI number. So unlimited stimulus is 8.8, Cayenne 8.4, wow. British Grace is 9.9. The LT Prods is 8.9. Star Fox's wage is not matching price. Hey, Harry Dominguez says, great show. Thank you for answering my questions. We'll be watching more often. Have a good night, sir. Hey, thank you so much. Appreciate it, Harry. You have a good one as well. James says, even if the CPI goes down a couple points, it's still horrendous. That's true. Well, there's the CPI and then there's the core CPI. And the Federal Reserve really looks at the core CPI more than regular CPI. And they do that for a couple reasons, because core CPI is exclusionary of energy prices, so very volatile food and energy. So they think that a core CPI is a more smooth way to look at it. But then again, I think about 80% has to do with like housing and rents and things like that. Bruce Wayne says, Tom, the CPI will be higher, strong demand where supply cannot even catch up, says Bruce Wayne. Okay, that's an interesting. So Bruce, I'm not sure if you saw the PMI numbers that came out, but here's something that came out of the report. So if we look at what our respondents saying, I want to read you guys an excerpt here. So this is coming out of the chemicals products. They say inflation is slowing down, or inflation is slowing down business. Overstock of raw materials due to prior supply chain issues is slowing orders. So we know that demand is really high, but if we look at this recent ISM manufacturing report that came out today, a lot of the respondents are saying orders are slowing down. So when orders slow down, what happens when, I'm a sales guy, so what happens when we're a little light on sales for the quarter? You usually put about promotions and things like that or lower prices. So as demand tails off and as future demand is uncertain, I think you're going to start to see prices drop a little bit. Also, here's another one. This comes out of the beverage or the food, beverage, and tobacco products. Here's what they said about that. They said growing inflation is pushing a stronger narrative around pending recession concerns. Many consumers appear to be pulling back on orders in an effort to reduce inventories. So not only have we had inventories spike, like we've seen at Walmart, like we've seen at Target, now for new orders, they're pulling back on new orders because they have a glut of inventory. So I think the CPI is going to come down, but again, you never know. But I think it may take a couple months for that to show up in the numbers, potentially. But then again, that could be famous last words. Could be. Steph writes, says, hey Tom, I just gave you an Insta follow. Appreciate it. I'll see you over there. Yeah, if you guys want to connect. I'm mainly more active on Twitter though. So if you want to follow me on Twitter at Walks Wall Street, we're really more active on there, but I'll try to be more active on other platforms as well. Jones says, hey Tom, futures are green. So this is another one of my favorite spots here. Yeah, James says the Phillips curve says you can't have your cake and eat it too. Bruce Wayne says, I don't read. They have surplus in inventory and food, housing, energy, surplus in clothing and non-essentials. Yeah, so that is correct, but they're out of the report today. So if you Google PMI numbers, you could actually go to the Institute for Supply Management's website. And if you scroll down to what respondents are saying, this is coming out of the food, beverage, and tobacco products. They say a growing inflation is pushing a stronger narrative around a pending recession. Many consumers appear to be pulling back on orders in an effort to reduce inventories. So this is like breaking news right off the press that actually just came out today. So this is why I think that the PMI, it may not show up in the CPI for another couple months because this is just what the respondents are starting to say now. But overall, I think you're right. FredX says, Tom, I've gone long enough without using Twitter. Don't make me use it. I definitely won't. I will not. Yeah, Wesley West says that shot looked like a wallpaper. So we're gonna oh my gosh, guys, it's already been 2 hours and we have not made it to Little Italy yet. I think we'll do Little Italy tomorrow. I mean, where did the time go? I felt like we just started streaming 2 seconds ago. I can't believe we're going on hour 3 now. But yeah, I think we may have to call it a day at the end of the street here.
All right, love you. I'll talk to you later.
Gary says, Don, most everybody greedy for food. Somebody says, is there a lot of rats in Koreatown? I mean, I wouldn't say more than anywhere else. I wouldn't say more than anywhere else. Rusty Golfers is dinner time. Lemonade says we'll go to Little Italy tomorrow. Here, if we cross the street, I'll show you guys a really good Korean restaurant, and then we will boogie out here. Hey, Kings 9966 is very entertaining and informative walk as usual. Appreciate it. Yeah, we'll be live tomorrow. So if you guys enjoyed the stream tonight, if you want to join us tomorrow at 8:30 at night, feel free to subscribe to the channel and leave a like on the stream. But I'll end with this view. I want to show you guys this view here. I think that's probably going to be the most appropriate way to end, is with the beautiful view of the Empire State Building. Yeah, Ruby Falcone is like little mini karaoke there. Yeah, I think that was from the show back in the day. What is it? I think it was a Disney show.
No, they're so expensive over that. If you don't do it, I'll kill you.
James, is always fun to think about finance and the economy. Great stream as always. Yeah, I think this is probably a record for feeling like time has flown. Ah, Kel, you nailed it. High School Musical. Big fan of High School Musical. I'd say about maybe an 8-9 out of 10 on the High School Musical there. Steph writes it's 8:30, so about 1 a.m. England. Yeah, apologize for anybody who's overseas.
They live a life where they're unhappy and that's all. You know what I mean?
Jeff says, I thought you were showing the best Korean restaurant. I'm going to show it. We just got to cross the street. Well, I should rephrase that. I should say it's the best Korean barbecue restaurant. I wouldn't say the best Korean restaurant. The best Korean restaurant is Take 31, or Her Name is Han, and that's on 31st Street. You know, for Tuesday, oh no, today's Monday, right? Yeah, for a Monday night, I mean, this city's pretty alive for a Monday night. Hey, Flowing Happy, thank you so much for the $10 donation. You are way too kind. I appreciate you, and hopefully you are having a fantastic day. So I think this is one of my favorite views in the city of the Empire State Building right here. But everybody, we will end it here. Thank you so much for joining me tonight on tonight's live stream, where we talked about so many topics, but more specifically the PMI numbers. After each live stream, if you go to the YouTube community page, I will be doing a little bit of a wrap up. So for those who missed the stream, you could go to the YouTube community page and look at the little write-up about what we talked about tonight. So everybody, make it a phenomenal rest of the week. Best of luck to everybody for the start of August. And whatever you do, you could do whatever you want this August. The only thing you can't do, which I forbid you to do, is quit. So you can do whatever you want, just don't quit. Do me that favor. So if you guys like the streams, if you guys enjoy my content, that's the only thing I ask, is just don't quit. So Lemonade, I appreciate it. Scott, thank you so much. Ryan Royal, Toby, Laura M, Lemonade, Photos from Around New York, Ruby Falcone, Sunshine After Rain, Broken Bones says, are you going to be doing this tomorrow night? We will at 8:30. Ryan Royal, CP, EBITDA, and everybody else, and to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. And I'll see everybody right back here, 8:30 p.m., New York City.